Welcome to the Crypto Lab. In today's video, I'm going to give you an update of my Bitcoin analysis. A big move is coming and I'm going to explain why I think that. There are a lot of interesting things happening right now, so I think you're going to like this video. We are going to analyze three charts. A bullish chart, which is the current chart that you are seeing right now on the 11 weeks time frame. Then we are going to talk about a bearish analysis because we have to, with the big picture chart. And last but not least, I will give you an update of the bottom cross chart because this chart will decide of the future of the market and if we are bullish or bearish. I don't want the video to be too long, so today most of the video will be dedicated to the bullish case as I will share a brand new idea. We will dive into the analysis together. Then I will talk about the bearish case briefly at the end of the video because unless Bitcoin has a clear move to the upside, the bearish scenario remains the most probable one. Remember, we always have to stay level-headed and balance our analysis. Now I think we are ready, so without further ado, let's begin. As always, if you're new here, please consider subscribing to the channel and hit the notification bell. If you like the video, give me a thumbs up, it helps a lot. Thanks for the support. In my last Bitcoin video, we talked about this 11 weeks chart. As you can see, this chart is a beauty. It is very clean without any noise. And I wanted to give you an update of this chart because we started a brand new candle this week. And as each candle is 11 weeks long, so it's more than 2 months, every time we create a new candle, it's an important event in the market. I remind you that in red, we have the 200 weeks moving average. And in green, just right here, this is the 33 exponential moving average for the 11 weeks time frame. We all know about the 200 weeks moving average because everybody is saying that when Bitcoin retests this line, this is generally a bottom, and they are right because so far it is the case. Every time we touched the line, it was a major bottom for Bitcoin. But on this channel, we are trying to stay a step ahead of the crowd. That's why we explore other theories. One of them implies the use of the green line. Indeed, the same criteria that we applied to the 200 weeks moving average to detect the bottoms can be applied also to the green line, as you can see. Look, here we touched the green line and it was a way better buying opportunity than the red line because we would have bought Bitcoin at a lower price using the green line. Here it was exactly the same scenario, as you can see, because it was a better buying opportunity. Then in 2018, it was the opposite. Indeed, this time we have the 200 weeks moving average below the green line, and it was a way better buying opportunity than the green line. Then we retested both lines at the same time during the COVID crisis, and the lines were pretty close from each other. And recently we retested the green line, and look how perfect the touch was. This is amazing, and this is not a coincidence. And a very important thing that we can add to this analysis is that the candles, the bottom candles, always closed above both lines. I repeat again, the bottom's candles always closed above both lines. You can see it here, it was very clear, a beautiful close above the red line. Here again, it was pretty close, but it's still a close above the red line, okay? Then, if we look at this bottom, it was the same thing. We have this candle piercing both lines, but at the end we closed above both lines. And here it was pretty close again, but as you can see, we closed above the green line, and this is what triggered the moonshot that we had after. And of course we have a beautiful close also above both lines with a beautiful wick piercing both lines at the same time. Open your ears because this is crucial for the rest of the video. So far, every time we had a bottom for Bitcoin, we pierced both lines at the same time. This is very important because with only one candle, we are testing both lines, okay? It was the case here, you can see it. Here, we pierced the red line and the green line. Here again, we pierced the green line and the red line. Here, it was the same thing. With one candle, we pierced both lines. Here, with one candle, we pierced both lines. Again, with the following candle, we pierced both lines. During the COVID crisis, we pierced both lines. So you get the pattern, but Look, this is the very first time in the whole Bitcoin history that we are testing only one line, just right here. So what could it mean? This is a theory, but it could make sense. Listen to me. Well, while I was making the analysis, an idea popped up in my mind. This kind of behavior, you know, touching two lines sometimes, like it was the case here, here, and other times touching only one line, it reminds me of the bull market support band. And if you don't know what it is, don't worry, I will explain very quickly what it is. Here is the bull market support band. It is made of the 21 exponential moving average in green and the 20 weeks moving average in orange. And then we colored the space between both lines in orange. And that's why it looks like a band. And this band is used as a support during bullish phases of the market and as a resistance during bearish phases. You can see it just right here, okay? If we take a look, you will see that, for example, during this legendary bull run of Bitcoin, it was a perfect support every time we retested the band. And during bear markets, you can see that we used this band as a resistance this time, because every time we retested the band, we got rejected from it until making a bottom. But what matters to me is this behavior. As you can see, for example, here we pierced the band, but we had a close above it, right? It was the case here. Okay, let me circle it. So we pierced the band, but we remained above it, okay? But here, look what happened. If we have a very close look at it, we touched the moving average, the exponential moving average, but we didn't pierce the band, okay? And we had a bounce from this and we went to the upside. Here it was the same thing. This time we touched the simple moving average and not the exponential moving average, and we got a bounce from the band. This is the power of the band, because we never know if we will touch the top of the band or the entire band, but at the end it doesn't matter because we bounced from this level. So I think you get the idea of the power of the band. It's that we never know if we will pierce the band or not. For example, here it was the same thing. Look, it's beautiful. Here we tested the top of the band, but here we pierced it. Okay? If we go here in the future, here we pierced the band, but we didn't touch the moving average, as you can see, and we pierced the exponential moving average. Here it was the same thing. Okay? If we go up like this, you see that we pierced the exponential moving average, but not the moving average. Okay, so now let's apply the same principles to the 11 weeks chart for the bottoms of Bitcoin. Okay, so now I don't want you to see these lines as two independent lines, but as a band. In fact, I will code the band for these indicators and I will show it to you. Okay guys, so I call this the bottom band, okay? And look how beautiful this is. This is amazing, okay? So look, it is exactly the same lines as before, but this time we have a band instead of just two lines. And this is giving us a new look on this chart, because right now, when we see a candle piercing the lines, we see a candle piercing the bands, exactly like what we saw with the bull market support band in the previous chart on the weekly time frame. So here we pierced the band and we closed above it. Here we pierced the band and we closed above it. Exactly what we saw before with the bull bear market support band. This is exactly the same scenario, guys. Here, look again. Okay, we pierced the band with a close above it. Here it was the same thing. Here it was the same thing. And this is what I want you to look at right now, because we touched the band and we had a bounce from it. And this is the first time in the whole history that we are doing this, testing one line without testing the other one. And that's why I thought about the band, because it's the same thing, guys. So to sum it up, my theory is this one. What if instead of using the 200 weeks moving average as the bottom line, in fact, Bitcoin is using this band as the bottom band? And if it is the case, we already reached the bottom by testing the exponential moving average. I know that it sounds crazy, but think about it for a minute. Let me take a step back and take a mental picture of this. Let me remove the drawings. Okay, and look at this beauty. It looks amazing. Bottom, bounce, and here we touched the band again. And if we switch to the weekly time frame, it looks even better. Look, okay, we touched it, pierced the band, bounce. Here we have a consolidation inside the band and bounce. Here we touched the band, but we close above it, bounce. And here we touched the band. So to sum it up, the band is a buying zone to accumulate Bitcoin. Take a minute to digest this information. I am the only channel talking about this, and if it happens to be true, people will probably copy my content. But you will know that we were the first to talk about this. Let me know what you think about this theory in the comments. Of course, this is the bullish case. I'm not saying that I'm right. I'm not saying that this is what will happen, but this is definitely something I wanted to share with you. To keep this video short and to stay level-headed, I will quickly share some updates of the big picture chart and the bottom cross chart. So you already know about this chart. This chart is showing us a big area of confluence just right here, okay? This is a major area of confluence, and this is the bearish case for Bitcoin. If we ever go down, we know that the next target is here. So it is around 20K, a bit lower than 20K. And I remind you that in the past, when we had areas on confluence, it was the perfect time to have a bottom for Bitcoin, okay? Every time it was the same thing. And that's why I think that if we go down, we will be attracted to this area. And the last chart of the day is this bottom cross chart. I remind you that every time we have a cross between the lines, it's the perfect time for the bottom of Bitcoin. Here we have a cross, it's the perfect time again, okay? I already made a video about this and I wanted to give you an update. As you can see, we are starting to see the line curving like this. So it could be an early sign that the market wants to avoid the cross. But it's too soon to talk about this. So for now, we need to wait to see if we will have the cross. If we will have the cross, then we will definitely retest the 20K area that we saw in the previous chart. But if the price wants to avoid the cross, then Bitcoin has to go up and then sideways or have a moonshot. It would be even better to avoid the cross. And if we avoid the cross, it will be the same scenario that we had during the COVID crisis here, when we had a capitulation below both lines. But to avoid the cross, Bitcoin went up. And from the moment we were above the yellow line, we started using it as a support again before the bull run, okay? So right now, we don't know if Bitcoin will be able to go above both lines. If we go, it will be a great news. But for now, we are pretty bearish, even if we have some good signs that we are going up right now. But remember that we have a pretty bearish area of confluence around 20K. So we need to pay attention to this. So let me know what you think about this analysis in the comments. I think this was very interesting. So don't hesitate to give me some feedback. Like, comment, and subscribe for the support. That's all for today's video. And as always, time will tell.